In today's Trader Tip, I want to talk about the interrelations between some of the different asset classes, particularly when you're trying to diagnose and understand how the price movement of one asset class might affect another one. For example, when you see the dollar rallying, historically, we do see that have impact on other markets such as gold and some of the metals. We also have seen it have an impact on oil. Historically, when we see a stronger dollar, you'll see downward pressure on some of those other asset classes. So I think that's something to pay attention to as we continue to see the dollar gyrate around here over the course of the last couple of months. And it looks like it's going to be volatile going into the end of the year as well. Also, looking at interest rates, we continue to get an interest rate environment that's very volatile, and that certainly has an impact on the dollar. And then with that impact on the dollar, if you see interest rates typically rising, or particularly U.S. interest rates rising stronger relative to global interest rates, that has a tendency to create a bid under the dollar. And if that it continues to be the theme here in the U.S. moving forward, that you would expect that that's going to filter through to some of the pricings on some of these other asset classes that I just mentioned, going through the dollar into the energy markets, into the metals markets. Also, it can also impact the grain markets as well. So I think that's something that, from a trading standpoint, it's very important that you recognize these underlying trends, particularly when you're trying to identify different trading opportunities.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.